It's Monday, March 1st, 2021, and this is your weekly look at the latest Altos Research data that came in over the weekend for the entire US real estate market. Each week, Altos tracks every home for sale in the US, all the pricing and supply and demand, and so that you can see the trends in the US housing market before it becomes available through the traditional media channels. Speaking of traditional media channels, if you missed it, this week, New York Times on last Friday actually ran a big piece titled, "Where Have All the Houses Gone?" The reporting team did some really in-depth work with our Altos research data and also interviewed many of the really the clear thinkers of the housing industry. So the piece is excellent. You should check it out if you haven't seen it already, especially if you are a real estate professional and you've been struggling to understand why we are where we are, or to communicate it with your buyers and sellers. In this piece, they capture all the reasons we've been talking about like all year long. And it's really well presented. Also, if you're a subscriber to Inman News, you can check out the piece I wrote for Inman this week on the inventory crisis topic also. Okay, let's dive into the data. This is a chart that everyone is talking about, of course. So we're down to 325,000 single-family homes on the market this week. That's down a couple percent from last week. As I've been trying to point out, this chart even understates the actual challenge. The bidding wars for many properties are happening so quickly that many homes are spending essentially 0 days on the market. They're already sold. They bypass really any time on the active market altogether. So this number here is what you'll see if you walk into the market right now. Normally this time of year, we'd be at this trough of inventory starting to ramp up for the spring. That does not look like it's happening this year. Where does it end? I have no idea. The forces working on the data and on the market are continuing to be in place. So hopefully March brings us a little bit of a break from this current cycle and a little bit more into a normal seasonal pattern. Like, fingers crossed that we get it. Of course, this market is not just about restricted supply. Demand is off the charts too. And we can see the demand supply result in these two market price trend lines that we like to follow closely here. The median price of single family homes in the US this week is 350K. That's ticking up each week as expected this time of year. What's interesting now is that the median price of the newly listed cohort is just $100 lower at $349,900. Remember, the price of the new listings cohort is a leading indicator of where sales prices will be in several months. They get newly listed now, they're on the market, they get offers, they close later on. It's a powerful example of what the economists call wisdom of the crowd. So the crowds in this case are the realtors, the listing agents, and the sellers. Their wisdom is being aware of all the demand around them really closely. So when a house gets 20 offers and goes on 100K over asking, the next listings get priced higher. And so what we're seeing as a result is the steepness of this gray-green line here. And what's happening now, of course, is all of those new listings are getting priced into the market. The existing stuff on the market is going so quickly at elevated prices that's turning into this rocket ship. Usually these two lines actually converge in the hottest markets when this is happening, when the new stuff is getting listed very quickly at a much increasing pace. Usually, though, that happens in late March when the market is at its peak. And you can see that in 2018, January through March of that year, and last year in 2020, actually, before the pandemic lockdown. You see that new listings price climbing. So the market is appreciating so quickly right now that the price of the new listings are launching each week in February, in the middle of winter, even like as the crazy storms are locking down half the country. We had almost no winter seasonality this year. We've been trying to keep people aware of how sensitive to this market this market is to interest rates. Mortgage rates climbed this week to almost 3%. This little move by itself is unlikely to slow anything right now. But if the trend continues for several months, or we get to like 3.5% or something, we'll be looking to measure the impact on demand as quickly as we can. And we can see it, this price of new listings, you'll see it quickly. So stay tuned for that. So finally this week, let's look at the median days on market. In this view, half the properties are going faster than this line, half the properties a little bit slower. I like to use median days on market rather than average mean in a crazy hot market, because the median reflects how fast, how many of these are moving super quickly. So nationally, we're at only 56 days. It's the 1st of March, and you can see in this seasonal pattern here that the market looks like it's at its peak time already. Like you can see, normally peak time is that last week of May or the first few weeks of June, when market time is fastest, before the second half of the summer, when things start slowing down a bit. In fact, like our inventory chart, though, this actually undersells how fast things really are right now. In many price points, in many of the hottest markets, demand is so high that the median days on market in some of these price points is essentially zero. At least like half of the homes are going immediately, just hours after listing, or a day. These hot markets are all over the country too, in places like diverse as Minnesota and Charlotte. So as I mentioned, with pricing, we had no winter slowdown this year. You'll notice this unseasonality in some of the traditional real estate numbers, the headline numbers. For example, sales rate measured by NAR, they're seasonally adjusted, which means they give an annual projection based on the season, and winter's lower, so they adjust those numbers higher. But so they might say seasonally adjusted sales rate of 6.5 million homes. But those seasonal adjustments are actually getting exaggerated this year because the market is not behaving seasonality in these past winter months. So what that means is the seasonally adjusted numbers are going to continue to outperform and like print shockingly high headlines for the next few months at least. Okay, that's the data for this month, for this week. Stay tuned to the YouTube channel as always for the data. If you're a real estate professional and you're working with buyers and sellers to communicate what's going on in this crazy market right now, as always, I recommend you go to altosresearch.com and connect some time with us. We can show you how to communicate about this market, your local market, to your people right now, and buyers and sellers really need your expertise. So there's a link to altosresearch.com in the description below. As always, more next week, and we'll see what happens next.